touch mortgage solution. Financing simplified.
Hey everyone, Anthony Venuto here with In Touch Mortgage Solutions. Hope everyone's doing well and staying safe out there. Wanted to do this video as we embark on April, and we're full swing into the spring market. And now we're starting to see, or you have been seeing over the last little while, is the increasing demand. The house prices are going up steadily. And, I just want to break down a couple of things that we're seeing in the marketplace right now. So number one is, consumer confidence is at an all-time high. We're seeing, 62% of Canadians looking at the economic outlook and being positive about it. Obviously, with announcements coming down the pipeline regarding further lockdowns and closures, yes, that could stifle sentiment in the marketplace. However, I think for the majority of Canadians, housing is still a resilient investment in not only building net worth and wealth, but for stability, mental health, and increasing the ability for your family to grow and having the space that you need. So that is sort of the thing that we're seeing right now, as a lot of, we see some urban sprawl. We see people pushing out of the downtown core, which we've seen. Those markets are starting to pick up once again as prices in other markets become unobtainable for many Canadians. But one thing that we've noticed over the last little while is, we are definitely in a period right now of wealth transfer. What I want to explain that is, we get the question all the time: how are people buying this? What's going on in the real estate market? Before I get into the wealth transfer, you have to look at some things that have been causing the housing market to sort of push in the direction that it's going. And when you break it down, the simple answer is monetary policy. What the Bank of Canada and the governments have done by printing all this money and basically injecting all this capital into the market, a byproduct of these measures is inflated asset prices, right? This is what's going to happen. We've seen it through the stock market. We've seen it through real estate and commodities and a lot of different other segments of the market. We've seen what happens when you print too much money. Now, the government's done a great job at making sure that, we don't, as Canadians, we don't fall, below certain thresholds. And, they're printing money and helping through stimulus to get people through this situation, right? And I don't want to say the words, but everybody knows what I'm talking about when I refer to, why the government had to do what it had to do. So monetary policy is a big catalyst for what caused the markets to do what they did. On top of that, so you have the monetary policy, and you also have the pent-up demand, right? A lot of people put their buying decisions on hold in 2020, and and because of the stimulus and staying home and not spending, generally all the same amount of money they would have normally, and I use this analogy, we didn't go out for that many dinners in 2020. You weren't really able to travel or vacation. You held off some major purchases because of the uncertainty. So a lot of Canadians built up some cash flows, and, a lot of Canadians have been paying out some debt. Yes, there has been the turns, the upside or the downside of it, depending how you want to look at it, where interest rates are significantly low, and they will tend to be there for a relatively long time. Just to keep in mind, we are in, even still with the rate hikes that we've seen in the bond market, we're still at historic lows for mortgages, especially if you're looking at the variable. Now, all these things encompass, as I said, it's literally the one big thing that I see is the government's really starting to try to step in and say, Tiff Macklin from the Governor of Bank of Canada has basically come and says, we see some exuberance in the housing market, and they're keeping an eye on it. But remember, the Bank of Canada, their job is not to control the housing market, right? Their job is to keep their fingers on the pulse of the economy. So, and when you look at certain aspects of the economy, some are still not performing to the point where, they're going to stop spending $3 to $4 billion a week in issuing government bonds and, creating liquidity in the banks and getting the credit out there. Because to get the credit out there, the easiest way for that to happen is through mortgages, right? And, and keep in mind, real estate is a huge driver for Canadian GDP in Canada. It represents a very large portion. I think it's 65% of consumer spending is related to or tied to housing. I mean, when you think about it, like somebody buys and sells, or the creation of construction, there's different facets of companies that benefit or prosper from, homes in Canada. So they keep that in mind. Now, how are people getting into these homes at these, very high price points or spending this kind of money? Well, there's people that were in the market that bought homes, years ago or even a few years ago have seen incredible gains in their homes and in what their homes are worth. But we're also hitting a point right now where we're starting to see, and I'm going to tie it back into, is the basically the wealth transfer, right, from the baby boomers, from the parents that have amassed a good amount of wealth, and they're realizing that their kids, or even if they're older, whatever, it doesn't matter the age, is that they can help them advance themselves and actually be here to see that, right? And for those who can do it, that's what's happening right now, and we do see that on a regular basis. There's many different components to what's driving these markets. There's been a lot of wealth created over the last year. Yes, there's a lot of misfortune that also has happened. A lot of industries, may never come back, or may take an extremely long period of time to bounce back. But the housing market, I think the most important aspect is and the government's touched on this a little bit. And, there's some news, about capital gains for primary residents and vacancy tax. I think that in my personal opinion, is that they're targeting the wrong side of the problem. Instead of trying to attack the demand side of it, they should be trying to ease the, supply side of it by, maybe just a suggestion, looking at development, saying, hey, you know what, it can take, so many years for it to get through the stages of development. They should ease that, make it a little bit easier for the developers and the builders to get those projects off the ground. Maybe give them some incentives to help them start those projects sooner. Because let's face it, if you're a builder, you own land and you're developing, you want to hold on to it, gain the max amount of profit. I mean, at the end of the day, everybody wants to earn a living, or everybody wants to make money. I mean, it's very important. So if we're giving them incentives to potentially do this a little bit sooner, then maybe we can start attacking the demand side. Because at the end of the day, I always say, you can do whatever you want through the regulations. Canada is very heavy regulated. Thank God for the stress test. And some people may say, oh my God, that really shot us or put us into a different predicament where we don't qualify because of it. Yes, but it also keeps and bolsters the real estate economy, knowing that Canadians can't afford the homes that they're in. And we are heavily regulated. One big thing that separated us from our partners down south in the United States is that, although we have lenders that look at things outside the box, the majority of Canadians had to undergo a high scrutiny, down payment verification, income and credit verification, which makes our economy very resilient. And I think that's why it's very attractive to foreign or other buyers. They were seeing this as we start to see this huge push into the luxury market, right? Another factor that, another point that I want to bring up is as we see home prices go up in the luxury home, or these larger home prices go up, is because you have to understand, as I say, back to the generational, the wealth transfer. You're also having aging baby boomers, and you're having couples that are saying, you know what, we're gonna upsize together because the parents need to move in, or something along those lines, or they need to be close by. These are all factors that are playing into why people are spending money on larger homes, is because we have other factors. And also keep in mind, 2020, I think, will also 2020 and 2021 will also be a year of immense growth in the population internally without my immigration at the time. And we're starting to see a lot more people, saying, hey, we're pregnant and we need more space. And, our 1 bedroom plus den condos just not going to cut it. So there's a lot of different variables that come to play in why we're seeing it now. The $1 million question, we're in a bubble. Well, we've been in a bubble apparently for the last 20 years. Is it going to correct? Obviously, we saw some very similar signs in 2016, 2017. We had a little bit of a downturn, but then, everything picked back up again. I mean, you can't change consumer spending or consumer confidence and the desire to own real estate or to be a homeowner. And I think as long as Canadians see the value that being a homeowner brings, then that's not going to change. And when, one thing that I wanted to touch on, I touched about it a little bit earlier, is investment. Like, as real estate is an investment. Your primary residence is an investment in yourself as well as your retirement. And that's another reason why I think that Canada needs to steer clear, from capital gains taxes on primary residence, and if they do implement it, or if that was something that they, because once it's on the table, or once there's a discussionary point, just a matter of time, in my opinion, before they do something in order to make back some of these, money printing that they've done, right? This is just a matter of time before they figure out a way to collect more taxes, because there's no way we're printing. There's an argument to be made that we could be printing our way out of this situation through inflation by, devaluing our currency and, paying less on the money that we owe. But inflation is going to be something that's very, keep a close eye on it. We're starting to see this in the lumber industry. We're starting to see this in the drywall and the concrete and pretty much all the supplies. And that ties into another point is, if you think about what the cost of lumber, concrete, copper, drywall, all the materials that go into building a home, if they go up in price, do you think home prices are going to get cheaper or they're going to get more expensive, right? And I was having this debate with a friend of mine, and we were sitting there saying, okay, you know what? Like, even if a piece of lumber went from $3 to $8 for a piece of lumber, even if, down the road things start to normal off, do you think that they're going to reduce the supply of lumber, the cost of lumber from 8 back to 3, or is it going to go to 5, right? So is it going to be more expensive? Just really wanted to have this conversation just to sort of talk about like what we're seeing in the mortgage marketplace as well as in the real estate. And we're starting to see in the mortgage end of it is a lot of Canadians who, people say, hey, what about this deferral cliff? What about this debt bubble and all this stuff that's happening? And I said, yeah, that's, definitely a factor to consider. But anyone that may have been in a precarious situation where they were maybe going to lose their job or, have lost their jobs and not able to keep up with the payments, they benefited from an insanely crazy market where, if they see the writing on the wall that they're unable to afford it, they're able to capitalize on this market and say, hey, you know what? Maybe we should get out now, and while the going's good, and sell, put some money in the bank, pay off our debts, and maybe we go rent. And one thing that I heard, and I was listening to a couple interviews with Benjamin Tal, which is the chief economist for CIBC, and he brought up a really valid point. Through this whole crisis, the impact, the industries or the people that got impacted, and I don't want to say this with any negativity, but it's a valid point, and it's something to consider, is that the hospitality and service industry were generally lower paying jobs, and the majority of these people that may have been in these industries maybe were not homeowners, maybe they were renters, because of their economic level, right, what they were earning and their ability to own a home. So and it sort of correlates back down to what happened, right? We didn't see these massive defaults yet, potentially, right? It could happen, but we haven't seen what they've projected. CMHC has been very bearish on the housing market. There's been a lot of people that are very bearish on it, and then there's a lot of people that are very bullish on it. But I think we need to have some form of intervention, because at the end of the day, I'm not sitting here saying, house prices are going to only go one way. because realistically it's not. I mean, and if that's what happens, then the government really needs to step in, and OSFI and all the governing bodies need to step in and sort of say, hey, how can we help make housing affordable for Canadians? Because right now there's too many people that are priced out of the market, and that is what I really think needs to happen. Is, as I said, instead of trying to trigger or detour the demand side of it, because that's not going to happen, in my opinion, or unless an entire sentiment in the country changes. They need to target the supply side of it by allowing people to build and get all that stuff through the red tape, through the bureaucracy, and start building homes for Canadians. And I just want to conclude by really saying, thanks for following our YouTube channel. Please, if you find this video helpful, obviously it's just an opinion. I just wanted to have a conversation. Hit the subscribe button, share with a friend. If I said something that you like or you agree with, leave a comment. Let me know. Let me know your thoughts. Let me know if I missed something. But yeah, that's it. I wanted just to share this on what our feelings are at In Touch Mortgage Solutions and what we're seeing here in the real estate market.